Yeah.
Okay.
He's doing it till 11:30 today.
11. Then we gotta go to the warehouse.
Wait.
Right now we are live. Isaac's first summer session 2026. Let's share the entire screen over here. So we're looking at the economic calendar. What did you notice about the economic calendar? We should kind of greet this. Let's greet this video a little bit. You just finished what grade?
6.
And what grade are you going to?
7.
Sit up. Try to keep your head straight, even though I'm not. Pull your chair up just a little bit. No, like go up so your head is. So are you excited about your, we're going to do this is kind of like I named the video, summer session trading. This is kind of your, how many summers have you been trading now? Like
3rd grade summer.
Where are you trading in 3rd grade? What year was that? You're in 6th grade, so that was in 2023. Yeah. 3rd grade. Wow, that's gangster. So you did 3rd to 4th, 4th to 5th, 5th to 6th, and now 6th to 7th. So you probably honestly were trading for 3 years. You probably did 4th to 5th, 5th to 6th, and now 6th to 7th. It might not have been that 3rd grade year, but it might have. We can look back. But definitely 3 years. I think you've been active. Definitely last year and the year before you actually did some work. But I don't think you were really working at Theo's house. So we'll go back and review that. But today is a light day. I've been through a lot with this trading over the past 5 years. Definitely the 3 years trading these futures. And we've been streaming for like 2 years. Trading the futures prop firm accounts. Just a lot going on with me, but back to you. Well, yeah, we do have to give a little recap on both. So I have maybe my 4th prop firm. I've blown about 3 since October was the first one I really blew on the books. October of 25 while we were in Vegas. And I went on to blow about 2 or 3 more. And I'm trying to catch my pace now because I was consistently profitable for over 2 years. Or was it 2 years? I think it was 18 months. I had the account. I was trading profitably for 18 months. Blew it in October. Blew another one in like January, October, November. Blew another one in November, December. Blew another one in January. And I think I blew one more. So October. That. And then this year, 1 or 2. So I've been kind of pacing myself. I've been doing a lot with VBG and the furniture business, and I've been at school, but we're definitely keeping our head down. I've been watching the market consistently still for these past few weeks. I've been trading. Once I blow an account, I kind of take a week, and then I start watching and paper trading, and then I kind of get back into it. So yeah. What do you have to say? Where are you coming from? So I'm back with a fresh account because I blew in March, April, something. It just came back online in May. Now here we are, June. I've been pretty busy with business, but I've been watching and observing. What about you? When's the last time you traded? You've been asking me when's the last time I traded. I traded last week. When's the last time you traded?
Last summer.
We have a live on here from March when you took a break from school. March was it spring break? We did a live. So you definitely forgot when we were doing our charting this morning and last night. He's definitely real
What did I forget
cold.
last night?
Just that you wanted to trade. I had to kind of motivate you to come down here. You wanted to watch. And we watched these charts. We feel better about being here now, well into the market open. So we're going to be here, I would say, at least a couple days a week with Isaac. I'm going to be trading at least a couple days a week with my business going on. And I want to kind of probably trade like Tuesday, Wednesday, Thursday. It's a really tough market. I'm hearing a lot of analysts say that I follow, traders that I say, they're saying it's a very tough market. It's been like running real hot this year to date. We're up crazy. And we got a $1,400 candle on Friday. We inverted that first presentation at the top of the opening range. Friday was a pretty interesting day. It went from open at about 30,099 down to the low of 28,007. Where is that? What do I do with this? Shift. How do I do this? There it is. Okay. So we can see 30 bars, 7 hours, negative 1,270.
But that's 30 candles, not one.
What do you mean? That's one day. 30, 15-minute candles. So well over 1,000 points on Friday's trading session. And from Thursday, it was way more. If we go from Thursday, afternoon, we closed up 1,800, 13.5 handles down from Thursday. Damn near 2,000 handles from Thursday afternoon. The market closed up there. And then when the market reopened and then it traded down, almost 2,000 handles in basically 24 hours. Pretty epic in the trading trading world. So now we're here seeing if this is finally a break from this crazy bull run. See, that's the run. It's been pretty ridiculous up even since this low here in March. So April, here we are today, June 8th. March 31st, April, May, 2 months. We ran up. How much in 2 months? $7,800, almost 8,000. So to come back down even 4,000 would be whatever. I mean, you see it came right here like half already. We're like halfway back. Let's do this. And let's delete that and go to the NQ where I have way less stuff. This is kind of what I see happening. Isaac sees a little something else. So there's the full run. Let me delete this one real quick. That's the full run. Half of it. So we bounced off a quarter of the run. That's interesting. Look at that. You see that?
Exactly. Almost.
Midpoint ICT. Where's my one? Midpoint. Do I have? Daily wick gradient. Okay, so there's the run from the low. If that was a high, which who knows what's what. That could be a high. The way it took out the high, like it created a high here at green, opened up, took it out right at the high, and now it came down to this 30%, and it could come up in this area today, which it's coming up already, and roll back over and come all the way down here to 50. I don't think it's just coming to the 50%. I think it would come lower. Maybe into here. Kind of like where my little arrow is. But that's interesting that it did the right there, because that went up from this high to this low. It did a fib 0.5 up to the 1 and a little over a half of the 1 to the 1/2, so like 1 1/4. So that's like 1. Especially if you go on a week, it might look a little cleaner. Yeah, just came up through the 1, didn't go to 1.5, and now we're pushing back down, possibly to the 0 and beyond. Let's see the OTE. Let's delete this and make this an optimal trade entry. Like, where would the pullback be? Yep, we would be that would be it right where my arrow is. The optimal trade entry here, here, or here. And it could wipe this all out. Come down to here, pop up, and come down into 2008. This could be crazy.
But I don't think it's going down to there.
Well, let's see.
Is all-time highs right here?
Let me do someone. I think I'm gonna keep that on there. Go ahead.
All-time highs right here.
Yeah, that's all-time highs. Up here, yep, that's all-time highs. 30,807 and 75 on the continuous contract. 1,825 on the June contract. So let's get into our day. What do we do on our? Did you read this whole thing?
No.
Huh?
No, I did not.
Okay. Where did you stop? Where did you think it was a good time to stop and play with a water bottle?
Right here.
Okay. Can't read it. This is our
Chart the
trade
dog
agreement
and what?
where we're confident, carefree, fearless, and focused. We preserve and we protect first. Then we do what?
Trade.
That's how we grow it. So go ahead and read.
Chart the end dog and what?
Did we do our end walk this time?
Yeah, but we didn't do the end dog.
Yeah, that's gonna be tonight.
Yeah, it's 6. And then I will set limit orders with a stop loss and take profit in place. I'll only let trades run if I have paid for the trade and have moved stop loss to break even.
Speak up and confidently and clearly, and I shouldn't really have to tell you that anymore.
I, Isaac Miguel.
You don't want to put that in front of your face, though. You are like creating a little piece of content.
I, Isaac Miguel Pitts, will strictly follow my trade plan. Only A+ trades in the session. I don't have to take any trades today. Only 4 micro contracts per trade. I'll risk very little to
less than
5% per trade. A max risk of $130, 5% per trade. Profit target of 10 to 15 points. 1 to
10 to what points?
10 to 50 points.
Take your time, confident, clear. I need you to be carefree, fearless, and most of all,
focused.
And you know how to read numbers.
Profit target of 10 to 51 to 10% per trade. Base hits. Today I am patient with my process and disciplined with my plan.
Take your time and read that sentence again and read every word. You don't have to run them
Today I am patient with my process and disciplined with my plan.
That's very important part of this.
After each trade, I live with the outcome, whichever way it goes. Mistakes happen. Big days come too. I know how to pay an expense and move on with the lesson learned. Learn with scalping business. Market open.
Midnight open.
Midnight open. 15-minute liquidities, opening range gap.
You did the opening range gap,
First
opening range
presentation.
rotations. These are two different things. You did the opening range gap. What's the opening range rotation? We were talking about that last night.
The opening range rotations, like, I don't know.
What's a rotation? You asked me last night, what's a rotation?
A move.
Okay, and what was the moves I was telling you that these signify? This is the opening range. This is the opening range right here, the 30-second opening range. And these are the rotations. How many handles do you remember?
No.
And you were like, why isn't it? You remember what you asked me? Why isn't it what?
Like 65.
These are 65 handle rotations. Look at that rotation. That's interesting how that rotation is right out what?
Halfway.
Of what?
Of the opening range.
Opening range what?
Opening range gap.
Okay.
I thought you said it didn't matter which time you did it on. I was like, do the opening range gap on a 15-minute or 1 minute. You were like, doesn't matter which time you were doing.
The opening range gap. Does it matter?
No.
Let's check to see if it changes. So we do what? We go to the regular trading hours. It doesn't matter?
No.
Right. So why are you saying you thought it doesn't matter?
Because you said this is this 30-second opening range gap.
No, that's not opening range gap. The opening range. This is an opening range gap.
What is the opening range?
That's a good question. So you see how that doesn't matter on a 15-minute chart? That closed here. We're on a 1 minute. It closed here. It opened right there at the bottom of that green candle, right?
Yeah.
We can go to a 5-minute chart. The gap is still there. It closed down here, opened up there, right? Go to a 15-minute chart. The gap is the same. Closed down here. So the bottom of the gap is here. Opened up there, right? Here we go. We're off, man.
What's the opening range?
Okay. Go back to this. Now the opening range is the first 30 seconds. You see that candle? That's the 30-second move of the 9:30 open, not the 9 a.m. open. The market opens at 9:30. PAX teaches the opening range is 9, the first 30 seconds of trading. And then it does rotations, which are moves in 65 handle rotations down and 65 handle rotations above. I just think it's interesting how it lines up with ICT concepts, because I've never heard PAX talking about an opening range gap, which he's probably aware of it.
It might be just a coincidence, though.
Nothing is a fucking coincidence in this stuff, bro. It's definitely not a coincidence. It's.
How do you know?
How do I know what?
It's not a coincidence.
Because I've studied this, like I said, for years. And these numbers, it's too much money to be coincidental. Like, oh, that just happened to line up with that. Like, these are two guys who've been trading for decades, and their lines line up. It's not a coincidence. It's just how the market trades. And that's, if we learn these things, like, it's not a coincidence that I buy cubes and sell them. I actually have to go buy them and sell them. And that's a horrible analogy, but this is not a coincidence. You could learn how to do this. Have a first presentation fair value gap that pushes up. It shows the move is going to be down, but then it breaks it, goes up where? Where did price stop?
Opening range.
The top of the opening range. And then where did it go? Where did it go to?
Like right at.
Yeah, but look where it initially went. Like you can kind of see how it shows some sensitivity to what?
The opening range.
Rotation. This is how many rotations down. If we just look at, yeah, these are just the rotations. It opened up, pushed up a little bit, pushed down to where? Like to this first rotation. So if you shorted because it came out of the opening range, you could take profit here at this one. Then it pushes back up, probably stops you out if you're at break even, but it doesn't go nowhere. It just stays inside opening range. Then what's it do? Pushes down through the first rotation and down where?
To the
Second.
Second.
This is the first rotation. From here, 65 handles down. Then from here, 65 handles down. Where do you think it's going right now? Possibly.
Down.
To where?
To the third.
I think it's going to which one? I think it's going to the third, fourth, fifth one, to the midpoint of the opener range. That's my what? You want to do a recap? What were we supposed to do? Recap bias. And what was my bias?
That it was going down.
Where's my little lines? Where's my squiggly wigglies?
You're the one minute right now.
What was that on the daily?
Yeah.
Okay. Yeah, so I thought it was going to go up a little more. But see, where I thought it was going to go up from there, it kind of went up to there. Price went right up to where my little squiggly line was, and now it's kind of pushing down. Let's just see how it continues to unfold. Let's go back to the June contract. But you see, and I don't think it's a coincidence. If it gets here, I don't think that would be a coincidence. If it doesn't get there, I don't think that doesn't exist still, and price isn't going to go down there. And it's not that it's a specific, like it's going to go there right now, and I'm going to take a short, but it is like that's a level to have on a chart to be aware of, even if you're not charting it. You could just kind of see it and be aware, like, we have a nice big what?
You said like right here. You said at the second line, the second rotation, that the market was a little sensitive to, but I don't see where it was sensitive to.
Good, that's good. I like that. But what is that? You do see that, right? What is this?
SIBI.
And then what does SIBI stand for?
Sell side imbalance, buy side liquidity.
SIBI stands for sell side imbalance, buy side liquidity. There's a L at the end of SIBI to stand for liquidity.
I don't know what it stands for.
Okay, you have to say a different statement. Because you know it's in there. When I say it, you're going to be like, oh yeah, I'm just saying it's back here. But you did what? You forgot what time the market opens, right? Mm-hmm. And that's just human behavior. If you don't do something, you're going to forget. That's why I wanted you down here last night, to kind of refresh your memory. So when we come up here, we don't have to refresh everything. Think about it. I want you to get a pen and right here, write SIBI down, and see if you can try to remember what it stands for if you write it in front of you. No, those Y's are I's. SIBI.
Sell side in, buy side in.
Sell side imbalance, you had that right.
Sell side imbalance.
Buy side, right? You said buy side liquidity.
B's.
No, it's not 2 B's. You have it right, spelled right there. Sell side.
Sell side imbalance.
What's the next word after sell side imbalance?
Buy side imbalance.
You're close. I want you to like look it up on chat. I want you to use your tools. I want to tell you, but I think it'll be better for you if you use a tool right now and pull up a window and like swiftly get what it is, because we spend a little too much time on here. If you just write ICT SIBI, you'll probably find it. I feel like I gave you too much information just by saying that. You should know how to look up stuff very quickly by using keywords. All of this, what does, da 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 da. You probably could just write. What are you using to look it up?
Grok.
That's why I don't fool what you call them.
Sell side imbalance, buy side inefficiency.
Do you remember now? Okay. Do you remember what this sell side imbalance, buy side inefficiency is called?
SIBI.
Yeah, but do you remember what kind of these are? It's an inefficiency, but there's a lot of different. It's like a car. Do you remember what kind of car this is? A SIBI is like saying this is a car. Okay. Is it a Ferrari? Is it a Toyota? Is it a Honda? Is it a Chevy? Is it a Ford? What do you call this?
A fair value gap.
Exactly. This is the first presented fair value gap. This is another fair value gap. Is this bullish or bearish?
That is bearish.
So you see how price came up and it respected the halfway point and it's kind of turning down. A short would be like here. You know, you could sell right here if it pressed out of here, or like right here. I kind of like this one right here to sell right there for 10 handles. 437 down. What was that? I said 37. 448. So like 350 down here is three. That's like 50 handles almost. More like 40, but it was counting. So now that it did all of that, I really like it as a short, possibly. Because it's up so high, you're able to say, okay, if it comes all the way back down here, it's probably going where?
Down.
To where? Uncover your face.
Line.
Just call it what it is. What is this?
Rotation.
And then there's the
fourth rotation.
And then there's the
fifth rotation.
And what's right above the fifth rotation?
The halfway
range. The consequent encroachment of the open and range gap from ICT. So I'm still, do you think it's now right now, just talk since we're live and we're streaming and we can review this. What do you think? Do you think it's going to go up here, take out these highs, or do you think it's going to come down here to the midpoint?
I think it's going to take out the highs.
All right, let's identify that. It's just, do you have it charted on your thing? Put the liquidity up, because I mean that's it. That's definitely because that look what is significant about this high right here?
It's high.
And is there anything close in proximity to that high? Which we call what? What do we call that high?
Buy side liquidity.
And why do you call it buy side liquidity? You asked this a couple years ago when we were at the other house. You asked, what is liquidity? Remember that question? Do you know?
Think.
But what is it?
Buy side liquidity.
Look at my
up to there. It's like
equals
buy stops.
What does that mean? If
stops
I was
people's out who buy.
Okay, so say right here, this was a big green candle and someone bought right here. No, that's not true. Say this big red candle, they sold it right here, thinking it's going to go down to this one. But now price starts moving back up. And as you say, it keeps moving up, and it's coming all the way up here. Why? Because if I sold right here, some people might say, well, I'm going to put my stop here. It's not going to come all the way back up here. So price can come all the way up here and then go down and give me my profit. But if it goes all the way up here, what's it going to do to someone who sold here and put their stop right here? Stop their loss. And then what do you do with that?
You get in.
You could. You really could get in here where they're buying and selling, but you could buy it. You could buy because they're selling.
they're selling you.
Yeah, you would sell it to them. You sell right there. You sell them at a premium because they have to buy it because they sold it with them.
Have to.
Well, if they put their stop there, and at some point they're gonna have to buy it. If they don't buy it here, they might have to buy it way up here, which is if you sell a pair of sneakers for $10 and it goes up 20, 30, 40, 50, like you sold them to me for 10, I gave you $10. You want to buy them for what? $5 or $1. So then it's like, yeah, you take my 10, buy the one, buy with one, and you have $9 profit. But if you sell them to me for 10 and you have to buy them at $50,
Why is the market like that? If you like sell one to you for 10, do you have to buy it for $80?
I'm gonna be like, look, bro, I want my sneakers that I paid you $10. Give them to me. Where are you gonna get them? You have to go
so
buy
you
a
don't
pair.
own it yet.
Right. You see, people think, and it's common, but you're learning something different from third grade, like you said. You have to have something to sell it. Oh, I have a phone. You want to buy my phone? No, I could sell you. I could middleman it and say, I'm gonna go buy a phone.
Yeah, like I know how to I know what middlemaning it is.
So you can, so in the middleman, you can buy or sell first. But in real mentality, it's like, well, how can you sell something that you don't own? Well, you middleman it.
Yeah.
Give me the money. I'll go buy one and sell it to you. I'll find it for you. That's what I do with furniture, but I find it first. I don't middleman it. But in this market, you could sell something that you don't have.
So
And
like
I
if
sometimes
you're
I
selling
do.
a house, or not really. But
I'm gonna give you a real example. We were going up to Harrisburg to get office furniture, and I was posting pictures of it before I owned it in my possession. And someone wanted to buy it. I'm like, okay, you can buy it. They want to buy it in 3 weeks. So I'm like, can I get a deposit? So they gave me a deposit for what they wanted to buy. Once they gave me a deposit, that's when I went and got the stuff that they want to buy, and I put it in a container. And now I had to move it to our storage to hold it for them. But they paid me before I had the product. That's a real story. But soon as they gave me the 2,000, that made me go say, I got to go get this stuff to make sure I have it for them when they want it. Because in 3 weeks, they're going to say, hey, I'm ready for my tables that I gave you money for. And we got the rest of the money here for you too. So give me the tables. And now I got to get the tables, give them to them, and get the rest of my money and keep the money that I sold. Now, if they gave me 2,000 and they were going to give me another 2,000, but it's costing me 10,000 to get the tables, I got to pay 10,000 and make 4,000. What happens?
Down 6,000.
Exactly. I want to do it the other way. Have them pay me 10,000 and pay 4,000 for the tables. And then what happens? If they give me 10,000, then I go buy some tables at 4,000, how much what's the deal for me?
You're gonna be up 6,000.
Exactly.
Before all the other costs.
Which are what? This is good business.
Work, like labor.
I got to pay the guys to pick the tables up and put them in the truck. And then what does the truck want before it moves? Wants gas. And what if we go over the bridge?
You're running a truck.
You got to pay the rent for the truck.
And tolls.
And it wear and tears the tires. So it takes a little bit of tire tread away that we're eventually going to have to buy back when we buy new tires. It wear and tears on the oil. We got to put clean oil in it. So maintenance to the vehicle. Tolls, like you said. Labor, transport, and there's really no storage. But there was some storage. I factored it in a lot. I pay for the warehouse to let it sit in the warehouse that I have to pay for. You need the warehouse. And we run a business, so we have business insurance. There's fees for QuickBooks, so there's the fees for QuickBooks. So yeah. But after all that little stuff, you think I'll have any money left? You think all that cost $6,000 for the guys to move some tables and gas?
You might have like 5,500 left.
Might cost, but if we have to rent a truck, it can go down to 1,000. But But since we have a trailer, you're probably right. It's probably going to cost me about $500 on top of whatever I pay. But now here's the catch. How much did I pay for those tables?
You paid $4,000 for the tables.
Well, in that analogy, but how much am I really paying for the tables in Harrisburg?
You're paying a lot more. You're paying...
No, we were trying to get paid to
you
clean out.
you get paid to take them away.
We were trying to, but in this case, we're just getting them for the cost of the labor and the transportation and all that you said. So
y'all are getting them for free.
mm-hmm.
So y'all are really getting 10,000.
If someone gave us 10,000, but to be honest, that's not a true story either. But we are going to make a few grand off of that deal. And that's just all the way back to how can you sell? You don't have to. I want you to continue. Where'd you stop reading? Did you read all of this?
I stopped reading right here.
Okay, so go ahead and let's continue reading our trade agreement. I want you to reiterate the title of this. I don't want you to read it. Confident. Look at this. Carefree, fearless, and focused.
Trade agreement. Confident, carefree, fearless, and focused. Preserve, protect, and grow.
No, go
We
back
have to
down
get the
here.
midnight open, 15-minute liquidities, opening range gap, and opening range rotations. First presentation. Keep an eye on the Mag 7, ES VIX.
What's the
Bitcoin,
Mag 7? We haven't mentioned them.
the
What are they
top
doing?
7 companies.
Apple, Google, Amazon, Microsoft, Nvidia, Tesla, Meta, Netflix is just one I put up there. But how do they look? Green or red or a mix?
Mostly green.
Out of 7, 4 are green. So it is mostly, but they're not crazy green. 3 of them are red. So it's not.
2% isn't crazy green.
Look
but
at
it's
this.
green.
This is where I said I would sell, but as it moved up, I would definitely look at here. If price closed below that fair value gap, taking a short.
What's big? 60,000.
No,
63,750.
33. Where are you getting 50?
Rounding it up.
Oh,
It's at
yeah,
49
about you.
right now. It's at 74, 85, 80.
Wow, yeah, it's moving. Bitcoin moves. So that's a good estimate. Yeah, 50 was a good estimate because it's kind of fluctuating up and down of 50. Okay, what do we got here?
Log into live account. Take a deep breath and relax.
Take a deep breath. When you read it, don't say take a deep breath and relax. Sit up. Stop scratching your arm. Sit up. Feet on the ground. Take a deep breath. See how you feel. Watch how you feel when you do this. A deep breath. And relax. Go ahead.
Identify an A+ setup with multiple confluences. A nice setup. If and only if identified, place a limit order with proper risk and place a base hit. Be patient in the trades, disciplined out of trades, right or right out. You can always take another trade. Keep stop loss in place. You can always take another trade another day. Keep stop loss in place. If no clear seen A+ setup appear to me, identify the session as a zero trade session, a time to do nothing at all, a ball.
Kind of a baseball analogy. I don't really like using that all the time. But right now we're coming into this fair value gap here. That's a what? This red one that I didn't draw. You see it?
I see it.
I think we're gonna come down to this opening range gap point. And I would short right under here, and I'm not clicking any buttons, but I'm gonna observe if price breaks below this green one, retouches it and takes off, not even close below. If it breaks below here,
So we have 40 more minutes in the session, so we're not doing any trading today.
I think we should kind of take a break. You got a lot to learn about. Open up, and I want you to chart, though. You still need to identify that line and see if you're going to be,
Yeah, I'm gonna be quiet.
if it's going to go to where you anticipated it going, up to the liquidity up there, like you said, or if it's going to come down to somewhere else, or it could do what for the whole session
It could just chop.
and do neither. It doesn't have to take. It doesn't have to come down, take this liquidity, and head towards the opening range midpoint. And it looks like it wants to do a little choppy. You just have to be patient. And that's the key about this. The biggest thing in here that patience flows into is if you're preserving and protecting. What are we preserving and protecting here specifically, even though you could look at it a lot? Huh? Wealth. That's a good one. Capital. Wealth is your health. And I guess that's preserved too. We do have to preserve our health here, not be. That's why we said what?
Take a deep breath and relax.
Take your shirt off your face, Al. You need to blow your nose. You stretch your shirt out when you do that. So I need to be more relaxed with you. Sometimes I get a little impatient because I want you to know all of this right now, but I think that's realistic. How do these 15-minute candles look to you on the ES and on the thingy thing?
They look like they're chopping around. They don't look like they're going anywhere.
Okay, so the ES is at its first rotation only. The NQ is pushing past the second. So it just looks heavy to me. This morning session, the buy side is right there. It definitely could come up here to the first rotation on the upside and kind of throw everybody off. But the bearishness, in my opinion, is that's from 1:40 p.m. on Friday.
I use this buy side right here.
Right here? Where?
Right there.
No, you're on NQ. So
yeah.
Which one? This one right here?
I don't know.
No, you use this one right here.
One, yeah.
That from 9:22 a.m.
Yeah.
Yeah, me too. And that one from 1 whatever on Friday, from Friday afternoon, was taken pre-market here and here again.
Why do they call it pre-market if the market's still moving?
What do you mean?
Why do they call it pre-market if like it's still moving and you can still trade?
Because the market opened at 9 a.m. It's called the New York Open. The market has an Asia Open, a London Open, a New York Open. So there's like pre-New York market. When I say pre-market, we're talking about our market in the U.S. to New York.
Have you ever gone to the New York Stock Exchange?
Yeah, we did a job up there and we walked around the block. We bought cubicles from right around the corner from Wall Street. It's right on Wall Street. It's Wall Street.
Like, have you ever been inside or you just walk around?
We walked in the front of the building. They have a lot of barriers. You can't just walk into there, but you have to have like a pass. It's kind of like a ticketed event. You can't just walk into the event, but it's every day. So it's not crazy, but it is kind of like they have like, you can't, I don't think you can drive in front of the New York Stock Exchange. I think that block is like, has those big pillars. Look at this. So now see, I would have never got in. That's why I like doing the breakouts, like the scalping breakouts, because if price came all the way back down here, it's likely that it's going lower. But if it doesn't come down here, it's just could do stuff like this.
I thought you said you would get in when it gets to the bottom of this red fair value gap.
This one?
Yeah, you said you would get in there.
No, I was talking about this green one. If it inverts this green one. And I was saying here, the first part, and it's all recorded, I said I would take this one. When this green candle was forming here, I was like, if it comes back down to this liquidity, because I was like, if it comes here, I think it's going there. But you want to get a better buy. You want to get a better entry. So you want to sell it higher if you think it's going lower. You don't want to wait till it comes all the way down to this line and sell it, and then it goes to this line, and you're like, I made a point. You want to make 20 points. So you got to sell it when it's up here somewhere. Where could it be? Here, here. And I was just thinking there, but then as it went up here, I was like, like that looked good, but it's in this is a real support level, as you could see, like it supported price. That's why I charted it. But if it broke through that and came below this, I would have sold under here, and it could have been wrong. I would have had my stop loss in place, but I think it would have been more probable to keep going lower if it broke through here again. It came down here once, went up, came down below this rotation again, came up. If it came down this rotation, look where that SIBI is. What is this? I called it a SIBI.
BISI.
And what's BISI stand for?
Buy side imbalance, sell side inefficiency.
And what kind of BISI is this?
Fair value gap.
Look right where the bottom of this fair value gap is. What is the bottom of this fair value gap on?
Which bottom? What's that thing called? The rotation.
The opening range rotation. And it done rotated all the way, and it didn't hit that rotation again. It stopped it right before it and shot up. And that is not random or coincidental. That this bottom of this BISI is on the 65 handle rotation off of the opening range. It's not coincidental that this rotation is just right, very, very close proximity to this 65 handle rotation off of the opening range on the NQ either. These are not coincidences.
I think the fair value gap could definitely be a coincidence because there's just candles. There's millions of candles.
But this morning, there's only one rotation at this level, and there's only one fair value gap at this level. It's millions of candles, but there's not millions of candles this morning.
But there's hundreds.
No, there's not. From market open, you can count them. It's minute. These are minute candles. How many minutes do we have? From 9:30 to 10:30. We're at like 10:30.
We're at like 100 minutes.
Yeah. So it's 100 candles. That's just not a lot. This stuff is happening. Look where the top of this BISI is. Where's the top of this SIBI? Where is it?
The rotation.
You think that's another coincidence out of these 100 candles? Which it's not even 100 candles because it's not 10:30 yet. And 1 hour is only 60 candles. So we're talking about 60 candles. And in 60 candles, 2 of them fell exactly on a rotation.
That was 6 of them. Because it takes 3 to make a fair value gap.
Right. But it's just that one level is right there. So we came all the way back up. But what did we form so far? We closed above here.
Relatively equal highs.
A lower high.
That's relatively equal, I think.
Yeah, could be. Let's go look at it on
I
5
don't think
minutes.
that's what, I feel like a lower high would be the top of the SIBI.
It's just lower, bro, and it looks lower to me.
But like the other one I showed you was the higher high was just about that much. How many handles is it?
What?
How many handle difference is the highs?
These ones and this one here. So those ones are at like 5, 5, 3. What was he doing? No, when you click on the candle, what do they do?
The high of this candle is 50, 35, 31, 29, 5, 31. The high of this candle is 48. It's like literally 12 handles. Or like 15.
There's at 5:30. That's like 23 high. We got about 30,
31 to 48.
50. It's more like 50. Are you going right to that one right there?
Yeah.
31, 41. Yeah, it's like 16, 17 handles.
Yeah.
But it's really like 15, 20. It's staying up there. What I see is it inverted the first presented. Now it's supporting off of there. It supported off of these BISIs, these fair value gaps in here. So it could push up. And if it pushes up, it could go there.
I think it should and would go there.
We're at the top. We're at the bottom of the end walk, though, from 526. This is very bearish still that it's drifting up to take some liquidity. Because when you look at the bigger time frame. Hold up. Is that all-time high? No, I was about to say, what the heck? It's not that close to it. It's like it's still down thousands of freaking handles. You see?
Yeah, I think after it takes the liquidity, like I said, it's going to go down.
These are looking like equal highs up here, but it's not. That's like a break for sure. Let's see. 4 hour. Open this up a little bit.
What happens if there's like a glitch or a bug in the stock market? Has that ever happened?
Probably, I would imagine, if it's tech.
Yeah, but like, doesn't that mess up people's money and stuff?
Hell yeah. Certain people, I'm sure some people have insurances in place, or they know when the glitch is about to happen, or the glitch just doesn't affect them the same way as it might affect others.
So why do so many people trade the stock market if you could just glitch and like you lose all your money or something?
Because what are the chances of a glitch versus the chances that you catch 1,000 handle move? Could you pay for a glitch? Is it worth the risk to maybe lose 1,000 to make 100,000? If you're making $50,000 a day, and one day you lose 50,000 because of a glitch, it's like, Or 3 days a year that glitches and you lose 150,000, 50,000 3 days, but every other day you make 50,000.
150,000 in 3 days is crazy work.
What if you make 150,000 back in the next 3 days? It's just a thing. So yeah, I do think there's glitches. I don't know how important they are, and I do think they're probably a cost of doing business. But there's probably times when people have a lot at risk. I think there are things in place to like where the brokerage houses who have the glitches in their systems that glitch the market might say, okay, well, there was a glitch and we're going to consider that and put everybody back where they were right before the glitch, and y'all could remake your decisions. Now, I don't know if that would happen, but I think if you had enough money, you could be like, look, I need like consideration here. Are you
I'm hungry.
Are you familiar with the term house of cards? Like it's just a house of cards. Like it's not anything you can blow it over. All of this, man, is like fake. to be light.
Like the
Meaning,
stock market's literally pixels and how are people making money on it?
put your feet on the floor and
So they're
speak
just like
confident.
buying companies, and if the company rises, they make money, or sell companies, and if the companies drop, they make money too,
What's price doing on?
going up.
If you're short
It
and the
just
price
broke
goes
one of the
down,
highs.
yeah. Put the thing down, put your feet on the floor, and just be attentive for a few more minutes. Then we'll go up and grab a snack and get out of here. If they're short, they're gonna make money on the way down. If they're long, they're gonna make money on the way up. And I mean, a lot of companies you might be surprised, but they're short and long. So yeah, it goes up, they make money. It goes down, they make money. And you could set up an account where you have some shorts on and some longs on.
You still options trade?
I do.
What's the difference between options trading and
I don't want you to ask so many random questions. You need to ask all these questions when you want to play the video game, and we're going to eat into your video game time, not the live Silver Bullet Hour. It's pretty random when we're watching price right now. Do you still options trade? What's the difference between the options trade and that? If the market goes up and down, it's like these are all kind of random. They're good questions, but they have nothing to do with what's about to happen here. What is about to happen here in your head? What price? What do you anticipate is about to happen?
I'm taking the liquidity.
Okay, so why? Is there anything that it's moving past or on or being supported by that makes you think it will? I don't see anything on your... Where's the first presented that it's being supported by?
Right here.
Yeah. What's next now?
The buy side liquidity.
What is a potential resistance on my chart that you don't have because you weren't here a couple weeks ago? Where would you have got in? It wouldn't be random if you were talking about where you would have got in.
The first presentation at the top of
right.
After
hindsight, it looks, but see how if you were talking about it when it was happening, that would be better than now. Like, yeah, of course, you see it's an obvious entry, but you didn't say that. You were asking about this and that, and did you have ever been to the stock market? Did I go inside of the stock market? It's not random, but it has. We're trading right now. We're charting and observing. I think I would have felt better if you were talking about your entry. Like I was talking about where I would go short, but guess what? You anticipated the move a little more properly. Here's a question. Did it hit the liquidity? You can't even see it. It's not even on your chart. Did it hit it?
Yes. No, it did not.
Yes or no?
No.
What was the price that it just went to?
It just went to 603.29, 603.75.
And what was the liquidity at?
Liquidity is 604.25.
So how
50 ticks off.
Well, is it no?
Two ticks.
These
tick is 25.
Right, 0.25. These only move in 0.25s. Every tick is 0.25.
So 2 ticks.
Right.
But like the traders we watched, or we used to watch, I'll say. They don't just trade because it's or just look at the market. They do other stuff because looking at the market is boring.
And because they're creating content. But guess what they did that was very boring for probably years before they came online and started entertaining people.
Trade.
Right. So right now, it's not boring for you to talk about an entry.
To me, it is.
Okay.
Maybe not to you.
Okay. All right. So, and I'm going to tell you this. I'm not going to force you because I don't even like being down here making you do something that's boring. So we have to have some talks about what you're going to do because you're getting too old to be down here crying and all of this. And we don't have to do it like this. You do have to do stuff, but If this is too boring for you and you would rather be outside running and hollering with your baby sister right now, that's an honest conversation we have to have, and you want to have summer break. But I'm gonna tell you this right now. You ain't gonna be sitting on that game. You're not gonna be watching. You're gonna be doing stuff that you don't want to do in your head. So you can get good at washing dishes, and there's a lot of places that need people to wash dishes. You'll be a professional dishwasher in a couple years, or you can be a professional this and have somebody wash your dishes for you, or buy a fucking dishwasher. But if that's too boring for you, play and wash the dishes and clean your room and read books. All of that is good, and you can do that stuff too. Reading will help you, you know. But I don't like the fact that you're acting like something like this is boring. It's boring if you put your head down, put your shirt up, cross your legs, and say, have you ever been to the stock exchange? Have you? Like, that's kind of like, I get it, but price is live. We're literally in the silver bullet hour. We're not staying here till 11:30. There's an end. 20 minutes. It's over. It just literally is about to do what you've been anticipating for like an hour. And you're in like 7th grade anticipating the movement of the New York, the NASDAQ, the 100 largest tech companies in your world. You're anticipating price. That shit is not boring to me. No. I don't know how it's boring to you to sit here and do that, man. But maybe you just don't see. And I don't think that's the case. I think you're smarter than that. I actually think you do see the significance of you saying when price was way down here, you were talking about this liquidity way up here, and you drew it somewhere before the market really even came down. Like, that doesn't excite you that you were able to anticipate price, knowing what you can do if you studied and were able to do that a couple times a week, right? You knew how to manage your risk on the downside, preserve, protect, and grow, and you knew how to keep your stop losses in place and get back in, because you could have been stopped out somewhere and just got back in. You probably wouldn't have been stopped out if you took what you said you would have took, the first presented fair value gap. How many handles would that have been? 497. How many handles would that have been? Would you think you would have got up before it hit that? Or do you think you would have been still sitting in here waiting for it to hit that?
I'll be still waiting for it to hit that.
You would, or do you usually take 10 handles or 20 handles or 30 handles or 40 handles? How many handles did it move from the first presented fair value gap?
29,497 to 604. So like 100 handles.
Yeah. And you think you would have still been sitting and waiting for something to happen, and it ran 100 handles on you? Huh?
I don't know, but probably not.
Yeah, the probability is not. You probably would have took 10 handles and been like, wow, I think I got 20. And if you do this for days and days and a couple more years, you'll probably know I'm going to take 40 handles off there, and I'm going to have a couple accounts maybe, and maybe make a few $1,000s before 11 a.m. in the morning. Or you can do something else that you want to do before 11 a.m. that's like more exciting and not as boring. What do you think? If in, let's say, 3 years, how old are you going to be?
15.
You just anticipated price when you're 12. 100 handle move. And you said it's boring. Not because it's boring, because you're just in a mood and you want to cross your legs and pull your shirt up over your head and ask about the stock market, like the physical building right now. And your dad said what? Read this, and then what did I make you read again?
Title.
And what's the title have in all caps?
Focus.
How'd you do on Focus today? Talking about the stock exchange and just asking questions while price is moving in the silver bullet hour at the New York Open. Were you pretty focused talking about not random stuff? Right? They were focused questions that were kind of helping you do what you're doing in front of you? Or you think that's something you could have done like after hours while we're driving to the warehouse? When you want to play a basketball game where price isn't moving. Maybe take a pause on a video game and say, hey, Dad, have you ever been to the stock market? Or you think right now during a trading session is the best time to ask questions about where I've been? And I'm not saying you can't, because I feel what you're saying that other things did. But for your first day back, there's a lot. You're learning what time the market opens again. You're recalling a lot of information. You're not at a level where you can talk about and play miniature putt-putt golf like Trades by Matt does. And like find where he's at, playing video games in the middle of the trading session, because he has a plan. He's getting subscriptions. He's making money. It's a business. He can't just be boring to people like you who cover like, this is boring, I'm turning. He's trying to engage them. You're not really doing all of that yet. What?
Nothing.
What just happened?
It took the buy side.
So if you were holding, you would have got the full 100 handles. Do you think you need to get 100 handles?
No.
Or you could take 40 handles and then watch it and be like, maybe I'll leave some on next time and see if it hits it. But maybe I'll move my stop loss where? Where would have been a good place to move your stop loss? Hindsight. Where would have been the perfect place to move your stop loss? No. Hindsight. Look, where did price just come down and not touch right here?
The top of the open range gap.
So where, if you had your stop loss, where would it have never been taken out?
The top of the open range.
So now moving forward, if you get a trade and it's close to your point, your goal, your what's that called? Your target, your price target, which is right here. And it pops back above the opening range. Above what else? The opening range gap and the opening range.
Yeah.
You could say, hey, maybe I won't put it at the top of the opening range. Maybe I'll put it somewhere a little bit lower. What's right lower than that? Maybe I'll put it at the top of the opening range gap. And hey, if you get stopped out and you got in here, where the fuck is the first presentation? Oh, this is the first presentation right here. If you got in right there, and your stop loss, 498, and your stop loss is where? 526. That's 26 handles. You don't have to do break even. Now, it could have worked this time, but if it came back down, you would have made no money versus 26 handles. Plus, you could have made a little something here. Like, that's 50 freaking handles. Like, you would have made something here, like maybe take it off when it hits the top of here, or even just got 50 handles. If you really got in at 48, you can get 48, 5, 498, 108, 118, 128, 138, 148 would have been under the opening range top. You would have took that and then left one on, moved the stop loss in profit, and got your full 100 fucking handles. You have to stay focused for a little bit of time. And when I say a little bit of time, like an hour to 2 hours, an hour and a half. If we come in at 9 to 11, that's 2 hours. And we do not have to do that every day. But I think, like I said at the beginning of this, you can do that a couple of days a week. To me, you figured out a reason to cry today. And it wasn't because you were wrong, which I hope you're over that. Where if price went down and it didn't go where you thought it was going to go, you anticipated it going, I hope you wouldn't get sad and cry. I understand you would feel like defeated, like, damn, I suck at this. Why would I do this? What's being right every day? And it's okay to know you're doing what? Setting limit orders with stop loss and take profit in place. And you're keeping your stop loss in place. Where do we talk about the stop loss? I'll risk very little, less than 5% per trade.
It's gonna roll over.
You can get in. You could say, I think it's going to roll over. You're talking real bold now that your anticipation is right. You said what it's going to do.
I said I think it's gonna roll over earlier too. Before I said it's gonna go up there. I said it's gonna go up there and then roll over.
Okay. But you think it's going to roll over.
Yeah.
You don't know what it's going to do. But that's good. You anticipate. But would you take another trade now to the short? If you had a day where you were long and you made 50 points and then 100 points?
If I made 100 points, I'll probably be done for the day.
Why? Why not make more?
Because it's don't lose.
Because you're preserving. You don't have to say, I don't want to lose. Be proactive. I'm preserving my earnings, Dad. I'm protecting my earnings. I grew it already. I did the goal. I grew it. 100 handles. We don't have to do more. Enough is enough, right?
Yeah.
Let enough be enough. After each trade, I live with the outcome, whichever way it goes. I know how to pay an expense and move on with the lessons learned. Learn with the scalping business. Where does it talk about I'm getting back in? You can always get back in. And here. Patient into trades, discipline out of trades. Right or right out. So you're either right or you're right out. And you lose very little.
You can always take another trade.
Another day. Keep stop loss in place. So as long as you do that, if price goes the other way, like now, you see, you said it's gonna roll over. Now I don't know what you meant, but that don't look like a rollover to me. That looks like a continuation. Where do you think it's going? What's up there?
That and walk.
From a couple weeks ago, and what else is up there?
The opening range. The opening range. Shoot. Opening range. Rotation.
How many handle rotation?
65 handle rotation.
Okay, so now we need to identify the next liquidity. Where do you think it's going next? Where's the next liquidity place? Look at your chart and chart the next buy side liquidity. Too speechless.
Friday at like 10:20. I think that's the next buy side.
kind of wind it down now. Looks like it may. So it took the high. Kind of took that liquidity. This wasn't a high. This was like a fake. Like it came in 2 ticks, pulled back. No push. Could this be the rollover? Maybe.
Maybe.
And I'm just excited to watch. I don't see how this is boring to you. I'd appreciate it if you considered that and maybe retracted some of your statements, because this doesn't look very boring. Unless I'm missing something.
This seems.
You have to change your mind, because you can figure out a way it can be boring.
I just don't know if. I don't want to get in trouble if I say it. It just seems boring. Like saying, oh, if I say it goes this way, is it really going to go this way?
But you have to see the vision of, in 3 years when you're 15, you're going to be like, hey, Dad, where do you want to eat tonight? Or I want to go on and order some bison. Or if you do this so regularly, it's just like, yo, like, let's plan our trip. You know, like we do. Not the trips we're going this summer. We could start planning our next year trips, our holiday. Like we can start planning our holiday trip. We can have our summer booked. Or, hey, Dad, like, you want to go do something together? Versus I got to go to the warehouse to work to get money to pay the bills because you like to eat and wear clothes. My goal before you were born was that by 15, you would be able to take care of yourself. I didn't say you could take care of me too, but if you do what you just did this morning, you could take care of me and your mom too, and your siblings. Financially, you can't take care of us, but you could take care of our trips and our bison ribs and our like day at the house. We could get an infinity pool put in the backyard fooling around with this stuff. So, and that's the thing. This isn't just to say, oh, yeah, that is boring. Yeah, oh, I said that line was going to go there and that line went there. Like, okay. It's like these little cartoon figures. Oh, I'm going to put the ball in and make the points be more than the points that you're in basketball. That's exciting. It's over. Yeah, my points are more than your points. Yeah. As an adult, Isaac, I'm like, so that I gotta go to work because niggas want to eat. And I like to eat certain types of food. And they're not cheap. How is it so exciting to spend hours playing video games that have no outcome in your life? Have you ever made $1 winning a thing in video games? Have you ever like made a friend, like added a friend to your life that like, yo, I've made this great friend and he really understands me and we talk, or she, or whatever? Have you made like a bond with somebody, or what value have you got from having a $500 gaming system with a couple $100 in joysticks and whatever games? Yeah. Allegedly, whatever that means. What's a friend anymore? Brother. Y'all are doing a whole bunch of nothing, man, and it's cool because you're a kid and it's the time to do some nothing. But there's kids who be doing stuff. And I want you to be one of those kids. and you're one of them already. Like by being able to know what a Sibi is and have forgotten, and now you remembered it again, you're probably not going to be forgetting that too long. That's not a rollover. It went up to the top of what?
We went to the NWOG.
There's still liquidity here. That's a thing. This liquidity hasn't been taken on the ES yet. That's that liquidity that was actually taken here. That's this liquidity, this line here that was taken pre-market from Friday afternoon. ES hasn't even taken that yet. So it might take that and then we get a rollover. If there's going to be a rollover, but that's 11. It was a good session, some ups, some downs already. I didn't want to take that tone with you. I did get frustrated when you said this is boring. Definitely don't like to see the tears. I would like you to do a lot better with the tears thing, and I would like me to do a lot better with the tone thing. The patience and the deep breaths. And what? Take a deep breath and relax on these little brothers. Ibis wants to learn in here too. Allegedly. Ibis. She might join us this summer, or me. Maybe I'll do it one without you and one with her. Whatever. It's going to be a lot for her to learn. I'm thinking I might have you do the TA, the teacher's assistant, and run her through the basics, like what time the market opens, what's the CB open rate, like what go through this with her.
Is she like doing it online or something?
No, they're gonna be here. We might do online. I don't know.
Does Ibis want to do it, or does her dad want to do it?
I think Ibis wants to do it. Her mom called me about it. Maybe her mom wants her to do it. Maybe she asked about it. Investing, trading, I don't know. But we'll talk to her the difference between trading and investing and just some basics. And then might just send her the link. We could have sent her the link today. Maybe we'll do that if you trade with me tomorrow. Since we're warmed up. And you know this is not boring, right? And I don't think you should say that during our trading session. My takeaways are my tone. Isaac challenged me today, and I failed the challenge. But I'm here, getting back up. I'm going to continue to be challenged with my little brother. He anticipated price. I like that. I gave enough commentary on that, though, already. You can close us out. Say what you got from today.
I just got stuff.
What's the what's the biggest thing from this morning's session of price that you got?
The price?
Just like watching price this morning, like I know that you got a lot out of your whole life, but just from 9:30 to now, really we started at like 9. What did you get from the movement? What's going on? The interaction with your...
I just need to be more focused.
Speak up confidently and clearly. Put your feet on the floor.
I need to be more focused.
Put your feet on the floor.
What
do you think you did well?
What
do you think you did well? What did you do good? You talked about you could improve on focus. Yeah, but
I analyzed where I thought the market was going to go. And it went there.
Anticipated.
I anticipated.
Or you thought it was going to go there.
Guessed.
Your guess, but really your anticipation based off of your charting, which was based off of your analyzation or your analysis. You anticipated or you made an educated guess on where the price is going. And today, the market was in line with what you thought. It could have easily went the other way. But it went where you thought it would go. And it didn't go where was I talking about?
I thought it was going to go like the third or fourth one in the halfway point of the opening range gap.
And I would have been wrecked trying to play that. But, you saw me. I would have never got in to get wrecked based off of what I said. And that's what I want you to do the next trading session. You're not going to trade. I may or may not, if I see a setup, But what we're both going to do is say where we would get in. And that's the one thing I would like you to do next time. Talk about when you would enter, because you were talking about the direction, but you were just asking other questions. You weren't keeping the conversation on, I think it's going here, and this is where I would get in. That wouldn't have been as random as have I ever been to the stock market. So I see those questions are good, and you can talk about stuff, especially around the stock market and visiting the building. But we have to do certain things first, and preserve, protect, and grow. And growing is, not just saying I think it's going to go up. It's getting real granular, real specific, where the entry for it to go up would be for you, and how many points you would have made, and how you would have exited, and how you would have held a little piece maybe, and how you would have got your full move, and would you have left anything on still? These are conversations I want you to get into, Isaac. And by the time you're 15, you feel me? You can close it.